Intel's acquisition of McAfee, as our Dominic Chu was just telling us, isn't the only big story in the M&A world today. First Niagara announcing plans to buy New Alliance Bank shares in a cash and stock deal worth about $1.5 billion. Sandler O'Neill advised First Niagara on the deal, and the company's co-founder, James Dunne, joins us now in an exclusive Bloomberg television interview. Mr. Dunne, welcome back to Bloomberg News. It's been a while. Good to see you again,
Delighted
sir.
to be here.
As I mentioned, Sandler O'Neill had an advisory role in this merger between First Niagara and New Alliance. Does that signal to people that M&A activity right now is heating up, even though the volumes this year, acquisition volumes, do remain low?
M&A activity will have to heaten up because it's been rather lackluster. I think this deal at just under $1.5 billion was the biggest deal that's been done since, I guess, October of 2008. It's a good sign. It's a great story, too. I mean, here's a company, First Niagara, that during the crisis, through John Coleman, the CEO, did things. They raised $1 billion in capital. They paid back TARP. That deal that was done in October of 2008, they ended up buying the branches of PNC as a result of that merger. Made a purchase in Philadelphia. So he has done a great job through this crisis, and I think it's a good sign.
Well, over the last 6 weeks or so, we're seeing that corporate announcements are doing very well. Earnings are doing very well. And that's also a good sign for M&A activity because it shows that companies are willing to spend money. But on the flip side of that, we have economic indicators like we have today, none of them looking very hopeful. And as we were watching the stock market today, we're seeing the market taking a dive, as my partner Julie Hyman was mentioning. All 30 Dow stocks are in the red today. Where is the disconnect that's going on between between Wall Street and Main Street?
Well, I mean, we've got a jobless recovery. We have moved the leverage that was in the private sector into the public sector. We have a lot of uncertainties in Washington. There are a lot of things to be concerned about. But I think we are getting through it. It's going to take time. It's not going to be a magical fix. And I think M&A activity will pick up as a result. But everybody is being more conservative. Corporate balance sheets, individuals, they're all building up their cash. Things are not just going to turn around overnight. It's going to take some time.
Okay, then where's the impatience coming from? Because, you know, I'm sure you hear it as well. People thought a magic wand was going to be waved, and all of a sudden, the next day, everything was going to be rosy. But when you have an unemployment rate that's near 10%, as you mentioned, a jobless recovery, that means that consumers aren't spending. They're afraid to spend their money because either their job situation is somewhat tenuous or they believe they may, in fact, get laid off. So where does the confidence come back? Is this a crisis of confidence right now?
It is certainly. There is a lack of confidence, and I think a lot of that is directed at Washington, frankly. Not all of it, but
why do you say that?
Well, we've got sort of an anti-business sentiment there. We've got some of it was necessary, but we have serious deficit issues. We want to say only things that people want to hear. We're unwilling to face the fact that there is going to have to be some pain through this recovery, and it's going to be very, very difficult. People do not, people are impatient because there's an entitlement that feel that things have to be that a certain way, and they're not going to be. And that's a greater concern over time.
Is it your opinion that anti-business sentiment might be from top down, maybe from the White House down? A lot of critics have said that the administration does appear to be anti-business, even though the administration has said that's not in fact the case, that on their watch, businesses have actually done well.
I think we have too many people down there that are more worried about keeping their jobs than doing their jobs.
That's a line from the American President movie.
But I came here to talk about Stan Druckenmiller.
And we are going to get to Mr. Druckenmiller right now. Thank you. Yesterday, your friend, Mr. Druckenmiller, said that after 30 years that he was going to call it quits. Your thoughts on that? Were you surprised to hear that?
Sure, I was surprised in a sense that he's been, if you really look at a weighted risk return basis, without all the fluff and all the charts of everybody else saying what they produced and what they did. As an investor and knowing a little bit about what's going on there, he is probably the greatest of all time. I mean, when you look at it over a 30-year period of time, never a losing year, his real return of capital, really his numbers are, this is not just the Hall of Famer, but, the #1 guy in the Hall of Fame.
And over that 30-year period, average annual returns about 30%, correct?
Awfully good.
Pretty
good.
Not too bad. Okay, so this year it's down maybe about 5%. Was that just too much for him to accept, given that all of his friends, people who know him, say that he's a man driven to success?
Well, he is an intensely competitive person.
Mm-hmm.
He hates to lose at anything. It could be a dice game, it could be a golf game, or anything. First of all, the year isn't over. He's down under 5%, and it's August. Okay, I think history would tell us that'll probably turn around. He's been down a lot more than that at different points and come back very well. I don't think that had a factor. I just think that overall the times are just difficult in general. And I think the reality that he takes it very personally about managing his people's money. Why does he need it?
What does his announced retirement say about the state of hedge funds right now?
Well, I think there is something to be said that if you really think about it, the greatest of all time says, I had enough. But I think it's more about the amount that people manage. I think that it's very, very difficult once you get into the 7, 8, 9, 10, 12, $15 billion numbers to affect the real rate of return. I think, I don't think that's too difficult to understand.
How concerned are people at this announcement, especially those who were invested with him?
I think there's concern that he's retiring and only managing his own money. There's also a great appreciation for everything that he has done for so many of us.
So you're happy for him as a friend, but
I am ecstatic for him as a friend. I think he is going to have all the fun and opportunity he needs running his $3 billion or whatever amount he's running. And but obviously it's an example of a real all-star. You've got to find another place to go. Now there will be other opportunities, but in that respect, you hate to see him go, and I know a lot of people feel that way.
James Dunne of Sandler O'Neill was kind enough to stick with us through the break and through Mr. Obama's comments. Sir, I was wondering if I could get your reaction.
Well, I'm all for working together, and he should start with him. I mean, he needs to set a better example. He needs to remove this sort of tone of anti-business. He needs to make some hard decisions. He needs to listen to himself.
Welcome back to Bloomberg News, and we're joined once again with James Dunne. He's joining us in an exclusive Bloomberg television interview. Mr. Dunne of Sandler O'Neill. Sir, thank you so much for staying with us. We appreciate it. One more question I had about your friend Stanley Druckenmiller announcing yesterday he retire from running Duquesne Capital. His mentor was George Soros. Tell us about that relationship.
Well, Stan is terrifically a generous person. He gives credit on so many levels to so many people. First of all, mentor, I think, is an overused word, but if it's incorrect. I mean, his mentor was this guy, Spiro Drelis. He was at PNC. He's an 82-year-old guy. I've never met him, but that's the guy that really was Stan's mentor. Stan, when he had Duquesne and then eventually went to Dreyfus and was there for 7 years, was the #1 rated mutual fund for a number of years. Soros contacted him. He had never met him before. He went with Soros. I think they had under $2 billion at the time. When Stan left, they had $25 billion. And it was obviously, they made wonderful music together. I mean, it was a tremendous partnership. But Stan's real mentor was this guy, Spiro Drelis, down in
How did he influence him?
Oh, God, his thinking, his quantitative thinking, his analysis, the way he evaluates charts, trends, his decisiveness. He gives him, now, some of it, I think, whatever he did, he would have worked out pretty well at. But this fellow in Pittsburgh, Drelis, was really the guy that was his mentor. And he gives great credit to people like Sam Reeves at a different level, Ken Langone. Stan is pretty generous with his praise. And obviously, he and Soros, they did okay together.
Not too bad.
But that was a partnership, and I think they did as much for each other.
Okay.
No doubt about that.
In our final minute, financial regulatory reform. Is that a paper tiger?
Absolutely. I mean, you've got to address Fannie and Freddie. We've got Republicans.
Why has that not been addressed?
I don't know.
Is it because of the political season, the political climate? Because there have been a lot of people on the left and the right who said that real reform cannot take place unless Fannie and Freddie are adequately addressed.
I agree with that, but I think we're just in a highly political time. When we want something, we say stop the partnership and do what I say, and that's just not the way to get it done. We have some serious issues. We've got a ballooning deficit. And we better start addressing them with real stuff, not just stuff that appeals to the crowds.
Final question in about 20 seconds. The economy between now and the end of the year, what does it look like?
Pretty mediocre.
Really?
Yeah. I don't think. We have 8 million less jobs in the country. We have to address that issue. I think people want to do that. I think the president's trying. I think everyone wants to do it. But we have to encourage the private market. We have to encourage business. We have to get people to hire people. We have to get people to spend. We're not heading in the right direction at all.
All right, James Dunne, Sandler O'Neill joining us on set. Sir, it's a pleasure to meet you. Thanks so much for coming in.
Nice to see you.
Appreciate it.